Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we're doing the Stock Market Weekly Recap, recapping the March 10th week, 2017, guys. We're looking at what the markets did this week. We're looking at some of the stocks that went up the most and down the most this week. We're looking at what were the biggest news stories this week and what is there to look forward to in the next week, guys. What do we have coming up for big news? So let's just go ahead and get right into this, guys. Leave a thumbs up if you enjoy it. Let's go. So we got the Dow Jones actually down. Can you believe that, guys? The Dow went down 0.5%. It's a miracle. It seems like so many weeks in a row I've done these videos and the Dow's been up. So it went down for once. We had the NASDAQ down 0.15% also. And then lastly, we had the S&P 500 down 0.44%, guys. So wow, the market actually went down for once. I mean, it seems like, I don't know, I might have to go back in videos and see how many videos in a row it was the markets were up, but it seems like every single week for like the last at least 4 or 5 weeks they've been up. So they went down for once. So let's go ahead and look at some of these stocks that went up the most this week, guys. We had RH, Restoration Hardware, went up over 13% this week. This one definitely caught my eye because I tracked this stock, and this stock was in the 3 stocks I'm buying now video. I would say probably like 5 or 6 months ago I had it in there, and it had a really good week this week. H&R Block had a good week, up over 13%. Must be because I did my taxes with them this year and I had to pay them all those fees. But yeah, their stock did very well this week. Tailored Brands on the downside, one of the worst stocks. Actually, I think it was literally the worst stock in the entire NYSE this week, down over 36%. They own Men's Warehouse, Joseph A. Bank, some of those brands. And then Snapchat caught my eye this week, down over 18%. Snapchat is a company that is probably just going to be very, very volatile for like the next 6 to 12 months, honestly. And that's the way some of these big tech stocks that IPO, or just IPOs in general, they're very volatile. It's like one week they're up 20% and next week they're down. Those stocks might be good stocks if you're like a day trader. If you're someone that trades daily or weekly, might be a good stock. You know, you go long it for a bit and then it goes up a bunch and then you sell it and you go short and then vice versa. But of course, if it just keeps shooting up one way or another way, you might get screwed. So that's the kind of scary side of that. So Snapchat, that's just going to be a stock that's going to be very volatile over time, guys. So what caught my eyes this week? The biggest news story, in my opinion, was non-farm payrolls increased 235,000 in February. Unemployment rate is now 4.7%. I don't know why they need to put in for the first full month of Donald Trump's presidency. I was actually trying to like find something that like didn't relate it to Trump because every like media or outlet wanted to like put Trump's name in there. And I'm like, why do like the media outlets and just like the media in general, why do they always feel like they need to put the president's name when they just come into office like that? Like if the economy lost 235,000 jobs this past month, it wouldn't be Trump's fault. You know, he has no policies he's put in place that have done anything good for the economy or bad for the economy yet. He could in the future maybe, but nothing yet. It's the same thing as like when a president comes into office and the economy's a mess. You know, what have they done? But they get bad job numbers for like, you know, the first few months of them being in office. It's like, it needs, I judge presidents like, once they've been in office like 6, 7 months, then you can start judging them. And really, it's like a year past because that's when they actually start putting some of these policies and plans and laws into effect and, you know, either adding regulations, taking regulations away, cutting taxes, adding taxes, all those kinds of things. So that's when you can actually tell how a presidency is doing, guys. Not like the first month they're in office. They haven't done anything yet. They're trying to do stuff, but they haven't actually, it's just like whatever happened in the past is what's going to happen in the future. So it's just a weird thing. I don't know why they do that. It's just another reason I hate politics. So then another story that caught my eye this week is Bitcoin. So listen to this. The U.S. Securities and Exchange Commission on Friday denied a request to list that what would have been the first U.S. exchange-traded fund built to track Bitcoin, the digital currency. So basically, they were trying to have like a fund that basically tracks a price of Bitcoin that you and I, just normal investors, could buy into. And basically, however much Bitcoin goes up in price or down in price, that's however much that fund goes up in price or down in price. So we can invest in that and basically be investing in the price of Bitcoin, either going up or going down. So it's an interesting idea, but it did not get passed. Again, they've tried several years now of getting this done. And it's kind of like, I don't want to say delegitimizes Bitcoin in general, but it's definitely it's still not taken very seriously if they cannot get a fund built around this guy. So once they do that, then the legitimacy of Bitcoin is going to go way up at that point. So if that can ever happen, if it never happens, then Bitcoin's just going to kind of stay as a shadow currency until then, guys. So something else that caught my eyes this week, listen to this, and this is probably not the best thing if you're a Twitter shareholder. A big chunk of those likes, retweets, and followers lighting up your Twitter account may not be coming from human hands. According to new research from the University of Southern California, up to 15% of Twitter accounts are in fact bots rather than regular people. This is crazy. So they did a big, huge study on this, and 15%, it's estimated, there's the amount of fake, basically, Twitter accounts. So that's around 48 million fake Twitter accounts, guys, or bot activity on Twitter accounts. That is mind-blowing to me. And I wonder if this is just a Twitter problem, or are Facebook numbers inflated, or Instagram numbers inflated, and there are a lot of bot activity there, or YouTube numbers inflated. We know YouTube's done a really good job of cleansing the platform over the last 5 years as far as bot activity, and that's why, if you guys remember, this was like 3 or 4 years ago, there were channels that lost hundreds of thousands of subscribers, if not millions of subscribers, and like, YouTube did that on purpose because there was a lot of bot activity, and like people would just buy these bots back then, and basically they would have a bunch of fake subscribers on their accounts. Like you could buy, like I could buy bots back then, and I could have like 10 million subscribers right now if I really wanted to, and it would have probably cost me like $2,000 to buy them or whatever. But YouTube got rid of that bot activity, and now YouTube is probably the best platform as far as the legitimacy of real likes, real subscribers, those kinds of things, because it's really hard to fake it. I've tried to trick the program back when I was first starting on YouTube. Before I even had this channel, I had my business channel, right? My business channel. And I thought, oh man, maybe if I just like watch my video over and over again and like push it, it'll like take up the views, and then maybe it'll get recommended. Well, I tried that, and YouTube actually shut down my account because I tried that, and it was on my business account, and I'm like, okay, YouTube's got a pretty good thing going here. You can't even like trick the system anymore. It's ridiculous. And nowadays, if people try to like buy likes, buy subscribers, things like that, they get basically taken away within 24 hours. And I've heard stories where people will buy a bunch of subscribers, and their subscriber count will go way up, and the next day they're all taken away. And the person who was in Russia or whatever country, or India or whatever, that said, oh yeah, you get all this, they get the money for that because you pay up front for that, and then you get your subscribers taken away right away, your likes or whatever you paid for, because YouTube has a terrific program with that. I wonder if Facebook has as good a program as YouTube does. I wonder if Instagram does. Obviously, Twitter does not, and I had a feeling about that for a while, but this is just kind of adding some momentum to it. I think it's a big thing, because if you're valuing these companies like a Twitter, a Facebook, and Instagram, well, Instagram's with Facebook, Snapchat, Google with the YouTube platform, all these things, it's very important that those numbers are real. The subscriber numbers are real. The likes are real. The views are real, because you as someone that's an advertiser, for instance, you need to make sure that when you advertise on someone's, let's say someone paid me $10,000 to put a Fidelity sign back here, or TD Ameritrade or whatever, right? Let's say somebody did that, one of those companies. It needs to be like a legit amount of people watching my videos, and I can't just like buy views or whatever. And I wonder if people are doing that on Instagram. I wonder if people are doing that on Facebook, some of those platforms, because they're obviously doing it on Twitter. That's the bottom line, guys. So anyways, I thought that was really interesting subject to address, because it's just important in my opinion. So another story that caught my eyes this week is the bull market birthday. The S&P has shot up an incredible 250% since March 2009. But it would have to charge ahead for another 4 years to match the length of the longest bull run in history, which ran from 1987 to 2000, guys. So we have a bull market birthday that is 8 years now, 8-year bull market. Incredible, but not like, obviously it's not even the best bull market ever. We're still 4 years off of that, 5 years off of that, guys. So we got to keep going here if we're going to reach the best bull market ever. we'll see if we reach it. So what am I looking for in the next week, guys? The Federal Reserve Bank is basically, they're going to probably raise rates. They're probably going to raise rates by 0.25%, I would say. There's a possibility they could raise by 0.5%. I do not believe that will happen. They're probably going to raise by 0.25%. Interest rates will go up. They do need to go up, and I think it's a healthy thing for the economy. The economy is in a good place. You need to raise rates when the economy is good. We should have already raised rates a couple more times, in my opinion, but they hadn't, so it's whatever. I'm going to trust in their judgment. They need to raise rates on Wednesday. That should happen, so you should hear about that. Not many earnings left here, guys. There's going to be an earnings drought for like the next month. Tiffany & Company, they're reporting earnings. They're like probably one of the most expensive jewelry companies in the world. Del Taco is reporting earnings. They are a fast food franchise that is all across the West Coast. You buy tacos and burritos. It's kind of like maybe like a Taco Bell, but maybe just a little better than a Taco Bell type experience, in my opinion, at least. So those are the companies reporting earnings. Not a lot of action this coming week. Just expecting basically the Fed to raise rates, and that's about it. But sometimes in weeks like this, when you're like, oh, there's not much going on, sometimes those are weeks when a lot of stories come out. So just keep an eye out for that, guys. Thank you for watching. I hope you enjoyed this, guys, and have a great weekend.